Alright, what's up, bro? Today we're going to be doing some back testing. We're doing GBP, JPY, and basically what I like to do for back testing is I like to go back in time and then, like, instead of doing bar replay where I try to see it pan out as if I were doing live trading, I like to basically put the whole day out and then see what the most prime, most optimal trade setup there was. So we'll get right into it. This is Monday, June 9th, 2025. We're on GBP, JPY, like I said. And the most optimal move here would be to go long right here on this BISI. Buy side imbalance, this fair value gap, I'll just call it, because it sounds kind of sus, like BISI, BISI, like, I don't know, it sounds kind of weird. So I'll just call it a fair value gap. But if you look closely, you can see the bodies of these candles respecting consequent encroachment, and then the wick right here just barely fails to hit the bottom of the fair value gap. So really optimal there. And since I can only place a trade in the London kill zone, the most best optimal entry would have been this here, right there, boom, with the stop loss right here at this low for 15 pips. Trigger you in right there. Okay, and then what you would do basically is you would hold it till 2:25 and PM session on the same day. That would be right there for a 1 to 3.99, and on a 5-minute time frame there's probably something better. Oh yeah, right there, this inversion volume imbalance. There's a volume imbalance right here. You know, I want to get it real good. I like to be precise, you know. And you know, after having a bad week, it's really refreshing to just come and be in hindsight, you know, and that way you get to see everything that actually happened. There we go. So the prime exit would be right there for a 1 to 4.02, not the 3.99 I said earlier. Right there. So that's the most perfect optimal entry you could possibly take. And then if you could basically see the future, what you would do in New York time, or in the New York session, excuse me, is you would highlight this city here, right, fresh at open, and then you would just simply go long, stop loss right there, 10.6, even though that's really tight. It's permissible because usually with funded account challenges you'll have enough leverage and whatnot. So right here, this would be the most prime, most perfect setup you could possibly take. And that being said, let's move on to Tuesday. Yeah, like I said, I had a bad week last week, so this is like, you know, it's refreshing to see what actually like happened. Oh, and then I still have my my entries marked on there. I'll have to delete those real quick, but shouldn't be a problem. That's fine right there. Okay, just delete that. Okay, so for this day, we sold off really hard coming into the London session. We swept this barely, these smooth little lows right there, barely swept them. And what you would want to do basically is anticipate a reversal from that point. And once you do, here's a nice little inversion fair value gap entry, because as you can see right here, we swept it, and we didn't run it, we swept it. And this right here was the last fair value gap to the downside before that movement up, or before the shift. So basically, once these bodies start closing above it, like these two candles right here, it then makes it an inversion fair value gap. And the prime entry would be here technically. And then you could have a you could put your stop loss stop loss right there, 11.1 pips on that down close candle right there, because that's an algorithmic area. Because there was people buying, like smart money was buying on there, and stupid money was selling. So they want to ram it up real quick, so all those sellers can get trapped. Because once they're trapped in that cage, it doesn't really ever want to see it go back there. That's why you can see it right here. Well, stupid things in the way, but you can basically see how on this line right here, like I wish I could point to it. I wish you could see what I'm pointing to, but basically these two candles right there fail to touch the top of these down close candles here, here, and here, and that's algorithmic. My legs falling asleep. Sorry if it sounded all muffled right there. But yeah, and then the prime exit for the day would be here. Before I do a diagnosis, I want to go to a higher time frame to see what exactly is going on here. So that'd be a 7.48, and I don't see anything to the tick, but basically it would just be a move where we are failing to hit even a quadrant on this big, large downwards fair value gap. And if, like I said, if you could tell the future, if you could see into the future, you'd be able to know to put your take profit right there, just below the quadrant, or maybe an eighth. Yeah, maybe an eighth of the gap, but sorry, ICT never teaches about eighths or anything like that. So I'll just say, for the sake of the back testing, that the perfect exit would be below the first quadrant of that fair value gap. So this was Tuesday, and if you wanted to get a perfect entry again in New York, basically what you do is you would say, okay, on the 5-minute time frame, we have a fair value gap here, and at open, just like yesterday, or not yesterday, Monday, for the sake of backtesting, the perfect entry would be right at open here, just below consequent encroachment of that fair value gap. Stop loss right here, just play it safe, 14.4 pips, and then of course the same exit for 1 to 4 to 9. So my chair, like my table, I forgot, I haven't put the little or a sock, or like a little folded up piece of cardboard, because it's uneven and it topples back and forth. I'll try not to do that anymore, but anyways, I don't want these all to be the same color. The inversion fair value gap right here is orange, but normal ones are purple. And this one would be purple too. Boom. All right, now that this here would be perfection. That is the most perfect, most optimal thing you can do, apart from maybe catching a move to the downside right at London Open. But then again, this move right there is larger than what you could have caught right there, based on what I'm seeing with the naked eye. But you could get technical with that. So that's Tuesday. Let's move on to Wednesday. All right, Wednesday. Just gonna let it fan out. Stop it there. Delete this horrible trade I took. All right, so for Wednesday, the most optimal trade you could take in the London session clearly be a buy, and the reason you do it is everything looks choppy right here, so I'm gonna go down to a 5-minute, and yeah, so I'll treat this kind of like a smooth smooth high, you know, fair value gap type of thing. So there's an inversion fair value gap here on the 5-minute, and that is the most prime exit. So that takes care of that. Now for the entry, I would say, okay, we have a low. Let's just I don't want to complicate things. We have a low here. It gets swept. Even though the fair value gap is inside of that move running the low, I'd still consider this, because we're talking about like if you could see into the future. This would be the prime inversion fair value gap because that's a down closed gap. Even though it was during that, and ICT usually says before, but this one could be treated it too. But as you can see, the bodies are treated as it too, and the bodies are closing below it, and the wicks are stabbing into consequent encroachment of this gap right here. So for the sake of seeing what's perfect, that would be it. And you would just get it right there at the consequent encroachment. Your stop loss would be at that low for a 10.3 pip stop loss for GBP JPY, which is kind of tight, but it's like I said, it's permissible on a funded account. And your exit would be consequent encroachment of the inversion for value gap I showed you here. So that's prime for the London entry. Now for New York, it's a bit trickier because as you can see, we're going all the way up. We're going all over the place. That's probably a news driver right there. So, you know, where people will probably get tricked up, and I don't know if you took a trade during the New York session on Wednesday, but basically what I would be doing is I would say, okay, this is a fat fucking fair value gap, and price is probably going to try to hit maybe this low right here for a breaker play. And as you can see, there's a down close candle right there. So yeah, you gotta be careful doing that, dude, because your stop loss would not have been all the way the hell over here, trust me, or else you're not even catching a 1-to-1. So if you can go back in time, let's say you were a friggin' psychic and you could tell the most optimal entry for New York would be if you could somehow, now ICT probably caught this to the T, but if you could somehow anticipate this candle being the high, and then you can see that drop, basically the move would be this inversion fair value gap. Now there's a lot of inversion fair value gaps. Like I've learned that like during my back testing and during learning from ICT. There's a lot of inversion fair value gaps. So this is technically not a market structure shift because it didn't run out of swing low. But like I said, if you can anticipate it and you can see the future, the prime entry would be obviously up here, wicking just above it. And your stop loss, I guess minimum 10 pips. So it'd be just above that high. But even though you could put it right there, what I mean by perfect is a stop loss that's within the parameters of what your funded account will permit and what your challenge account will permit and what is permissible to the actual company you're trading with, like the prop firm. So I would do a 10 pip stop loss and holding it into the afternoon. The most optimal exit would be right there for a 1 to 5.56. God, wouldn't it just be so nice if you could fucking see the future? Like if you just look in time and see this shit, like, oh bro, I'd be fucking rich as hell. Oh man, I don't even want to think about that. Right, but that's why trading's so hard, right? I want to go to the 15-minute because I want to cover my bases from a top-down perspective. So nothing I can see there. Nothing I can see here except maybe these two down close candles. But I think you saw on the 1-minute time frame there was this fair value gap here. Hey, do you notice like whenever you're like if you make forex videos or if you're doing like content on YouTube or Instagram or TikTok or whatever, whenever you say fair value gap and you go to put on captions, it says fair valley, like a valley. I freaking hate that. And when I just said fair value gap right now, I got that because like it did kind of sound like valley, but I don't know if you can relate to that. Hey, that's what's up because I can't stand that. It's like I didn't say valley, I said value. Value. So yeah, here's the fair value gap right here. And yeah, if you knew just to put your take profit slightly below it for the purpose of wicking, that would be a perfect entry and a perfect exit. So this is Wednesday. Got 2 more days left and then we'll wrap it up. 15-minute, reset, play. And that. And there we go. Alright, so this is Thursday. The most optimal trade for London session would be to go long down here and hold into, well, technically the afternoon session. And let's break that down. So we have a low right here. Now I like this a lot actually because this low and that low right there are smooth. And as you can see right here, we went and disrupted it. So wait, actually, I think I have the move right here. That inversion fair value gap move. Or no, because it'd be in the middle of the night. I wouldn't be able to take that because it's not in the kill zone. What I basically meant is this gap right here would be an inversion for value gap, but I can't enter right there because that's when I'm asleep. Oh, come on. Sorry. Okay, there we go. I thought my internet was bugging out. Okay, so this gap here is an inversion fair value gap. And even though it's not the cleanest, this candle right here, it closes above that gap, making it an inversion fair value gap. Well, actually, no, it doesn't actually. I thought this candle right here did, but it's too damn tight. That's not right. So right here, when this candle opens on the 5-minute, it's going to come down into it, and then there's your perfect long right there. Stop loss 11.5 pips, holding it into the AM session for 1 to 6.23. And the reason you get out right there at that high is because there is an inversion for value gap here. Lots of inversion for value gaps, man. Holy crap. We ran out this high here. Swept it right there. Displaced. And when we return up to it, that's a fair value gap exit instead of an entry. It's kind of interesting how they can be used as exits and entries too, because normally you'd think it's just an entry, but yeah, they can be used as exits too. And for New York, you'd obviously want to you'd want to coincide with the movement upwards. So you could see this open, form a low, and then sweep the low, and then basically what you'd want to do is yet another freaking inversion for value gap entry. All these gaps, by the way, are inversion. Like even though they're all yellow, like they're yellow for a reason, or orange or whatever the hell it is. Yellow, orange. Is that orange or yellow? It looks orange. It looks orange yellowish, like it's the sun or something like that. So your prime entry would be right there. And your stop loss would go right there for an. It's got to be 10 pips. 10 pip stop. You know what? I like precision. Boom, right there. Okay. And then of course, same exit. And there you go. So this would be the most perfect, most prime trading day for Thursday on JPP, JPY. So let's get rid of all this. Alright, reset. 15-minute. Play. And this is going to be the last day, Friday. Oh no, did I forget to put the... Oh man, I forgot to put the damn things. Alright, I'm going to have to do this real quick. It's going to take like 5 seconds, don't worry. Okay, so 2 o'clock, 5 o'clock, kill zone, and for 8:30, boom. There we go. Alright, so back to normal. So the most perfect entry for this, it's obvious, it's right here on this fair value gap. Right here. And the quadrant, perfect. That's perfect algorithmic price delivery. So you'd, if you had quadrants marked on your gaps, that'd be the most optimal place to get in. Now, I want to go to a lower time frame to see where I could place my most optimal. Yeah, I think it'd be right here for a 15.1 pip stop loss, because that's the low of that body. And I don't want to just put it in a random place. Like, it has to be somewhere that's, it at least makes sense. There's at least logic behind it. So what did that trigger me? Oh, okay, there we go. Now the most primal exit, or most prime exit, would be there for, wow, 1 to 12.14. That's big. It's a big fish right. Can you imagine catching something like that? Holy shit, bro. I fucking framed that and put it on my wall. Holy shit, that's that is just beautiful. I just wanted to check my mic is still on, because I did recording earlier and my mic was off, and I was like, oh my gosh, there's no sound on the video. I literally had to delete it. It broke my heart, but yeah, so I just wanted to check my mic was on. But God, imagine catching that. Holy shit. Like perfect entry, perfect exit. You'd frame that. You'd for sure frame that. So the reason behind that exit would be, wow, holy fucking shit. And there's no algorithm, they say. There's no algorithm. There's no algorithm. Look at this. Look at this downwards for value gap. And then look at the high of the day. Insane. There is an algorithm. And the thing is it's literally up to you how much you can understand that algorithm and learn from the teacher, ICT. It's literally all up to you how much you want to understand the algorithm and how good you want to get. Like, it's literally all up to you, and it's crazy. I've been thinking, like, what if AI can take all of ICT's content, all of his videos, all of his forums, all of his lectures, all of his everything, and then it analyzes it in fucking 2 minutes, and then it's the best trader. It has perfect entries, perfect exit. It never loses. Like, can you imagine? Like, I guess they already have that because the market's booked by an algorithm, and there's people who obviously coded that algorithm and trade alongside it, like big money, smart money. But God, can you imagine if just the average like me, for example, like the average retail, like, investor or trader, like retail trader, can you imagine if they had access to something like that, or get like perfect entries, perfect? Like, that'd be fucking insane, dude. That'd be fucking insane. But here's the thing: there wouldn't be any more trading, because in order for there to be trading, there has to be counterparty too. Because like big money, let's say like they wanted to go long right here on this move. The reason why there's all this down movement is because there needs to be counterparty. So everyone down here is selling, 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 selling. Then they get raked through the coals. And their stop loss at smooth areas, for example, here, that high are smooth. That's counterparty exits. This high right here, counterparty exits. And in this gap right here, as you can see, it's counterparty exits. So sorry for that little tangent right there, but I want to see, to wrap up the day, I want to see where the perfect entry for New York was. At open, you'd want to see this low here get swept, and then I assume, wait, hold on. Oh, yep, there it is. Very, very small, but it is there. This inversion gap right here. Now, I'm sorry to minimize it so much, but right there. Boom. That candle gaps above it. And then this candle here at 10:05 drops into it. And like I said earlier, if you need to adjust for a wick, like wicking it, you'd be able to get that perfect entry. And then 11 pip stop loss for the stop loss. And then, of course, targeting the same exit for 1 to 7.79. So this here is the most perfect possible trading setup for Friday on JPP JPY. That's it. It cannot get more perfect than that. This is the objective algorithmic truth behind Friday and all those other days I just showed you. So that is it for this video. If you backtest this way, let me know in the comments section, because I very recently started to backtest like this on a perfection scale, like where I want to see, like what I just took you guys through, like the most optimal entries, the most optimal exits, and all that. And yeah, let me know if you backtest like this. It's fun making this. It's really refreshing, like I said earlier, and it's really nice to see what actually happened, because even though I just went over perfection for this week, when I actually was trading this week and live trading, I performed horribly. I lost so much on my challenge account and on my funded account. I'm doing a 50K challenge and a 5K funded account, and I lost around $2,800 across both of them. So it's really bad, really brutal. And yeah, it's nice to see what actually happened. And I'm going to be trading tonight in about half an hour, because it's 1:27 New York time, and the 2 a.m. London kill zone opens in 33 minutes, or 32 minutes and 18 seconds specifically, but who cares? Yeah, I'll record myself entering a trade and managing the position, because I can't go live yet on my YouTube account, but when I can, I'll start doing live trading. And with that being said, I will see you in the next video for my trade recap for tonight. So yeah, bye bro.